Today we're going to be taking a look at a stock that is currently over a 400 billion market cap, and it has dropped about 28% in the last 6 months. So it's definitely caught my attention and that of many investors. So let's see if this stock is worth investing in and what is the intrinsic value. Now, the stock we're going to be talking about is going to be Netflix. As you can see, the current price is at $90.32. So we're going to be taking a look at some metrics, some fundamental analysis to see if the numbers, what they look like, how they're performing these numbers, and see if this is a good investment to add to our portfolios. Now, before we get into all of that, if we take a quick look at what analyst rating are saying about Netflix, there's a total of 4.6 out of 5 rating. That consists of 44 analysts in the last 90 days, which 21 of them say the stock is a strong buy, 8 say it's just a buy, 13 of them have it on hold, 1 sell, and 1 strong sell. Now, this isn't the intrinsic value we're going to be taking a look at, but this is the price or the price forecast for Netflix stock. We're going to see on the low end is about $77, on the average is about $124, and on the high end is going to be about $152. And if we go back to the chart really quickly and we hit the 5-year mark or the 1-year mark even, we can see that Netflix has been dropping in price. This is due to a lot of the things that they got into, politics, this and that, a lot of their accusations. That's why the stock has been dropping. So I want to see if it makes sense investing in a company like this. Now, this is an average of the intrinsic value of Netflix. When the line is red up here, that means it has been overvalued. When it's below, like down here, that means the stock is undervalued. However, as you can see here, it's been overvalued, highly overvalued, I would say, for some time. Keep in mind, there's different metrics for different companies. So the intrinsic value isn't set in stone, but it is a good calculation to keep in mind, and you have a good base to know if you're investing in an expensive company or not. And as you can see, it has been dropping, and then all of a sudden it had this huge pop, and the price has been decreasing as well. Now, if you've been following the channel, you know I like stocks that are increasing their EPS and the price is dropping for whatever reason, and that's currently the case for Netflix. As you can see, there's divergence. They have been increasing their EPS over time, but for some reason the price right now is dropping, and it's because what I mentioned before, mainly due to the new acquisition. Usually investors don't like this because they think if you're buying other companies to make revenue, is usually because the product that you have can no longer make revenue or the margins that you've been used to, and that's not always the case. But let me know what you think about that concept in the comments below. I'm interested to know what you guys think. Now, if we compare the price to the current free cash flow of Netflix, we can see again they are increasing their free cash flow, but the price keeps decreasing. Again, another diversion that I'm very interested in. They have more cash, but the stock is cheaper in price. Now, if we go ahead and take a look at the shares outstanding compared to the price, once again, this is for a 5-year chart. Okay, we can see that the shares outstanding has been decreasing and the price has been decreasing as well. Usually when there's less shares in the market, you want the stock to be worth more, because if there's less share, that means your size of the pie is a little bit bigger, so I guess you have more value. That is currently not the case. This is another good sign. Then we have price compared to the revenue. As you can see, once again, Netflix keeps increasing their revenue. They keep increasing their revenue and the price keeps dropping. Another reason why I'm very interested in this stock. I'm not saying to go buy it right now and sell your house and go buy Netflix. I'm just saying it's interesting. And by the way, guys, if you want to take a look at metrics like this, there's going to be a link in the description below. You have a free trial. You can take a look up to 3 stocks per day. You don't even have to make a paid account. Now, again, let's go ahead and take a look at the price compared to the gross profit. What do we see again? The gross profit is increasing. Now, this doesn't mean gross profit percentage. This just means the overall amount. And the price of the stock is decreasing. Once again, I mean, I really don't want to bore you guys with the same chart, but if we compare the operating income, we can see everything is going up and up and up and up and up, and the price is obviously going down. Net income is going up and up and up and up and up, and the price is going down. You guys get the idea. This company has been doing very well in the numbers, but the price keeps dropping. So yeah, I'm very interested in Netflix right now. Now, of course, after seeing that, we saw that all of the financials were increasing. But if we take a look at it on a broad perspective, if we zoom out a little bit, we can see that revenue has been up 16%. Operating income is up 50%. Net income is up 61%. EPS is up 65%, and operating cash flow is up only 1%. Again, keep in mind that the free cash flow and operating cash flow is going to change a lot due to the recent acquisition of the new company. Now, as always, we want companies that have more assets than liabilities. That is currently the case for Netflix. There are 54.9 billion in assets and only 29 billion in liabilities. Their free cash flow margin is sitting at a beautiful 21%. And with this, as we always talk about in the channel, we want to see in the future, in the coming month, or in the next quarter if their management team is buying back shares. If they have numbers like this and the management team keeps buying back shares, this is a good sign. They believe the company is undervalued or the company is cheap and they want to keep increasing the portfolio, just buying back some of their shares. Now, if we take a look at more of the company efficiency, I mean, gross margin at 48%, net margin, operating margin at 29, net margin 24%. I mean, guys, the numbers are there. The numbers are there. The stock is dropping. I don't know. I'm not saying to go buy it, but I would love to hear your thesis in the comments. I'm really interested to know what you guys think about Netflix. Now, currently, as we just spoke about, they have a buyback yield of 0.87, which I think is very low compared to the current numbers that we're seeing for Netflix. Or maybe it's not. Maybe when we take a look at the intrinsic value, we can see that Netflix is extremely overvalued, and that's why their management team is not buying back heavy. Something it's not that I don't like, but I would love if Netflix did do is pay a dividend. They currently don't do it. I really don't think they have a reason to, but I mean, it would be something that definitely gives it another check mark for me to try and invest in this company, or at least open up a position. Now, the moment of truth, we're going to be taking a look at the intrinsic value. As you can already see, for a base case scenario, this stock would be overvalued at 40%, meaning the stock can be worth $54.22. Keep in mind, the intrinsic value is based on a calculation, but it won't be effective for every single type of stock. Each stock is different. This is just a broad example or a broad formula you can use to help you. Based on the formula, Netflix is considered to be overvalued on a base case. If we do the worst case scenario for the stock, it's overvalued at 58%, meaning the stock could be worth only about $38. And the best case scenario, the stock is still overvalued about 8%, meaning the stock is worth $82.84. Now, I ask you, if you want to invest in a company like this, are you waiting for it to be below the intrinsic value? Or are you opening a small position at these prices and then you're going to average down your cost as it gets down? That is if you do decide to invest in this company, if you think it's a good investment. I'd love to hear your thoughts in the comments below. As always, guys, thank you so much for the support, and I'll see you in the next video.